Okay, so we are now focused on Biz Prime. That's business news for the next 30 minutes. We'll revisit those stories a little bit later on. But Francis, there's only one story in town that we've been waiting eagerly since the markets closed, and the news has come out.
Yeah, and it's a big sure. Standard & Poor's has kept South Africa's credit rating unchanged. It made a scheduled announcement this evening following, of course, those unscheduled downgrades that came very swiftly after President Jacob Zuma's cabinet reshuffle at the end of March. Now, like Fitch, S&P had already moved South Africa, let's take a look, into the sub-investment grades, or so-called junk status. So here we are on S&P, but unlike Fitch, it had only moved our sovereign rating. This is our sovereign rating, which is linked to foreign currency, debt denominated in foreign currency, and that was in junk. It was feared that it would also downgrade rand-denominated debt. Since most South African bonds, that's what we use to raise debt, they're issued in rand. The higher rating for rand bonds right now, still sitting up here, has protected us from some of the fallout of the recent downgrades. So it's good news. No change in rand debt is likely to be viewed positively by the market. A rating, of course, essentially rates our country's ability to pay back the money that we have borrowed. Now, earlier this week, Fitch affirmed our rating, also in junk, unfortunately, and South Africa's status on the highest level of junk. Moody's, quite different, you can see, rates us 2 notches above junk, but it does have South Africa on watch for a possible rating downgrade. All right, we're now joined on the line by S&P's analyst Gardner Risiker. Gardner, thank you for joining us this evening. This is a relief for us. Give us some of the thinking behind no change tonight.
Thank you very much for the opportunity. When we lowered the ratings in April, we mentioned that policy continuity would be at risk, and this would affect the fiscal and economic growth outcomes. So since then, we have managed to have an engagement with the government. We have got comfortable that in the near term, the policy framework remains unchanged, the fiscal framework remains unchanged. However, economic growth has weakened since then, so we have also revised downwards our forecast for 2017 to 1% for this year, and then 1.3% next year. So it is probably a good thing that economic growth is improving from the paltry 0.3% last year into 1%. Part of it is from the commodity cycles, but what is restraining is the issue around the political environment that impacts on uncertainty, that impacts on business confidence. So we have affirmed that at this rating level, but we still have concerns with the political cycle that it may have negative impact on the economic and fiscal outcomes.
All right, 2 things that you've said are interesting. First, you said you've met with government and those reassured you. Does this mean our new finance minister has managed to convince you that all could be well?
Well, he has convinced us that he will stay on the same fiscal framework that was before his time and now during his time. So it's not so much about us saying a particular path, but it's about realizing that the pace of economic growth for South Africa is very low, and South Africa's debt to GDP is now very high. So in order to stabilize it, you need fiscal deficits to come down. There could be pressures on expenditure, so there is need to find ways of managing that, as long as it does not destabilize the current fiscal path.
All right, and then you spoke about politics, and this has become increasingly important in your rhetoric. Political uncertainty, the ANC heading into a leadership change. And then, are you following this email scandal? More claims of corruption. To what extent does your rating reflect a lack of confidence in our political leaders?
Yeah, no, it's not specifically about the emails that's been going around, but it's more to do with what we've said, I think, more generally, that the political contestation has increased, and to some extent it sidetracks the leadership in government from focusing on economic growth priorities and focusing on the political issues. So you would see that some of that goes to the heart of the issues around the state-owned enterprises. We have mentioned a number of governance issues. We've mentioned Eskom that also needs to turn around financially to be in a better financial position so that there's less dependence on government support. So some of those issues come back to the same issues rather than being specific on the emails issue.
All right, Gardner, before we let you go, could you tell us what South Africa would have to do to regain investment status in your eyes? And why are you seeing our foreign currency debt differently to our rand-denominated debt?
Yeah, okay. So the first part, in terms of regaining investment grade for the foreign currency, I think we are still far away from that. The best price in the near term is to have the negative outlook change to stable outlook, and I think we'd need to see through the political cycle. So that means our next ratings review is end of November. We probably would also need to assess at that time what the risks would be. Then secondly, I think we see the local currency being at a higher level than the foreign currency because we see that South Africa has got highly developed domestic capital markets. They've got monetary flexibility, which means they're able to service local currency obligations differently from the foreign currency obligations. So we could change that if we were to see fiscal flexibility declining, but that's not the case as yet. So it's still staying at the same current level, but with negative outlook.
All right, please don't change it anytime soon. Thank you very much, Gardner Rissiger from S&P, the credit rating agency.